Hello everyone, it's Clayton again. I was just making a new video kind of to show off the portfolio, but the main focus of this video for me is actually going to be a stock that I've become very interested in. I've been doing a little bit of research on it. You've probably heard it in the news. There's a lot going on with it. But as you can see with my portfolio, I'm down a whopping $20.94. I've said before, the value of the portfolio means minimal to me. I know I said it means nothing. Obviously, that's not exactly true, but that's not something I focus on. Currently, still, we've got no dividends, but once those start to come in, which will actually be in a few days, now that I'm thinking about it. As you can see, I did deposit another $300. It was just the rest of the Christmas money that I had free. But one thing you will notice is there's two changes that I want to show, and one is with the portfolio the stock I'm actually going to talk about this video. I finally got everything moved over, and it was a process, but it was a pretty easy process, but you need to work with M1 Finance. I am going to go over this in a future video and break down exactly what you need to do. I've spoken to M1. They said I can share the emails, so that's perfect. So you can see their response, what I had to do, and everything above. The first thing I wanted to say, though, is I did put in a purchase, or will be purchased once I have my monthly deposit that comes in soon, for Wells Fargo, which I had spoke about in the last video. Thought about it a lot, and I realized I do want to get into Wells Fargo, especially now. The dividend growth to me seems like an obvious choice. And with the new CEO that we spoke of and all of that, I feel like it's the right decision. Now, but the one I want to talk about today is actually, oh, and also if anyone was tracking, my industrial, as you see, has been down a lot. It is for 3M. And that's not surprising to me. 3M's had a lot going on in the news recently. I'm still not planning on getting off of them. And I still want to put about, I think I've got 12% right now of purchasing them on the next deposit to balance out my portfolio. But the main one I want to focus on today is a stock that I have seen and heard about for a long time, and especially now is in the news that caught my attention, and that is Carnival Corporations. Now, with Carnival, it seems kind of like one of those stocks that some people like, some people don't. But looking into it, it's something that really interests me. Aside from what I'm going to go over when it comes to the dividends, how the dividends have done in the past and all that, one thing that I did find interesting, though I don't go on cruises myself, is if you do have 100 shares of a Carnival Cruise Line stock, they give you a free $250, and this is for every time you go on one of their cruises. So hey, if you like to go on cruises a lot and you like Carnival Cruise once you do your own kind of look into the stock itself, then it's free money for you if you're going cruising. So again, not something that I focus on. I don't go on cruise ships often. I'm not a big open water guy. But the main focus is why I wanted to talk about the stock today. So as you may or may not have seen, the stock for Carnival has kind of been falling recently. It dipped up in the beginning of January, and now with this new coronavirus that's hit, the stocks are taking a decent little drop off, as you've seen. They're starting to, today they were kind of flat and steady. They weren't too far of a dip. It fell, what, a few cents? Yeah, like 50 cents. And the main reason for this is it looks like people are starting to freak out about what's going on, which to me doesn't make much sense. So as you can see in the report, that on Thursday, after the cruise lines announced that three of their ships will be departing from Shanghai, will be canceled through February 8th. So to a lot of people that are investing, this is a huge red flag because it's essentially losing income that they could have made, and it's going to hurt the stock and all of that. But the real thing is this isn't a permanent loss. It is a temporary loss that they're doing because of this virus. This virus isn't something that's now going to take this completely out of the market. Yes, for the next 3 months, maybe a little bit longer, it's going to be a little skittish, just like it was with SARS. But this is the time to me to buy the stock because people are panicking just because of this illness. And obviously it's claimed 170 people it's taken, and that's no small number at all. And I don't want to underplay the seriousness of the virus. But the shares have just continued to drop. You can see right here, the shares are down 3.63%. And to me, that's the perfect time to get on. And the reason I say this is let's pull up their dividends. The ones, again, that's what I focus on. Right now, their dividend yield is 4.3%. Their annual payout is $2. 4.3% is pretty good dividend yield for those that don't know much about the dividend stock or kind of just getting into it. But the thing that interests me the most is, so as you see and as you just read, they're going to be losing revenue and with canceling some of these cruise ships. But that's not really a big deal to me, because my biggest worry isn't about the loss of the dividends, or not the dividends, the revenue, because their payout ratio is only 44% currently. It's very common, especially for a company like Carnival, that if they need to, they'll increase their payout ratio to keep the dividends the same or grow their dividends, because they do not want to anger the investors that are currently with them. So this gives them a lot of room to make sure that they reach the dividend payouts that they want without having to lower them. And if you look at their dividend history, we pull up the last 5 years, you see obviously a pretty consistent, it goes up basically 5 cents per quarter consistently. And throughout 2018 and 19 is where it kind of stayed steady at 50 cents quarterly. So to me, let me pull up their lifetime. The only real dip you see is when it went through the recession. That hit them pretty hard back in 2009. Because obviously with the recession, there was less people traveling, there was less money being spent, and it can be understood why that would be a problem. But aside from that, and they had one just large payout that they did back in the end of 2012. But aside from that, it's been consistently growing. And as you can see, before that recession hit, even in like 2003 and the early 2000s, when the recession was hitting then, it had a very steady incline. So to me, it's a very good stock. It's weird to say that, but something that's falling and people are panicking about now, to me, is something that I want to jump all over. And this isn't for a short-term gain. This is something that I have looked at for a little bit now, and this coronavirus has kind of just given me the okay to purchase the stock. Because before, it wasn't out of my range, but I figured I could wait a little bit and see if it would fall, and it did just that. And for people that are watching this now, this is currently the January 30th. It may very well have dropped some more since this. It wouldn't surprise me at all if it's continuing to drop from people panicking about cruise lines or cruises being halted, or people being stuck on cruise ships right now as they're testing people that they feel may have it, so they don't want to go out on the water. So to me, like I said, it's something that I really want to focus on, and I'm going to put, I think I've got maybe, is it like 8% of my, so I've got 20% of that pie, and that pie is, I think, 17 or 19%. So it's about maybe 8 to 10% of my portfolio. It's something I'm really interested in. And obviously, I think it's going to be something that does well. And I've said this many times, and I'm going to say it again. In the beginning of this video, it also had a note. I'm no financial advisor. Do not take what I say as gospel or as something that you just need to jump in and blindly do. I recommend you to do your own research. Now, I can lead you to research, that's fine. I'm okay doing that and using the information to make your own decisions. But please do not just take what I say as gospel, jump on it, and do as I'm doing. Please do your own research about it. I'm no financial advisor. If you want a financial advisor, please contact one locally. They'll gladly help you with this. But to me, I like to do this on my own. I like to do my own research, and I like to know what I'm handling and what I'm dealing with consistently. So, like I said, the purpose of this video is just really introduce Carnival to you, and why I think Carnival will be a fantastic stock today and going forward. And again, if anybody goes on Carnival Cruise Lines, there's a little bit of a benefit and a perk for you that you can use whenever you want. The only other thing I really wanted to touch on, because I've seen this in the news recently, is I briefly touched on it here with 3M. So 3M has had a little bit of a problem recently in the news, and people are panicking when it comes to 3M because of just they didn't meet their sales quote, what they thought they were going to hit when it came to their numbers at the end of the year. It just came out, and people are starting to freak out about them. But you got to remember, this is an industry that has done very well for itself, and I think that'll continue. Let me pull up their Seeking Alpha stock information and pull up their dividends really fast. So yeah, their dividend history, as you can see, has consistently grown year in and year out for quite a while. And even during the recession where everyone was hit, they never faltered. So I don't see this being a problem. Yes, the stock is falling. Today it had a little bit of an uptick. But over the last year, you can see there has been a fall off from April of last year to today. It's lost it's almost down $50 almost. But to me, it's another one of those that I'm going to continue to buy. And in 2008 is when 18 is when it hit its peak, which was most stocks. But to me, this is just another one of those I'm going to keep putting money into. The dividends are not having, there's no sign of dividends being cut. They're only at a 60% ratio. It's a little high for what I like, but until they reach like the 70 mark, that's really when I start to worry just a little bit. It still doesn't mean they're going to cut their dividends by any means, but it's when I start to worry just a little bit because their payout ratio is diminishing. And I know from watching an interview the other day with their CEO, they were talking about they've ramped up, especially in China. All of their production right now is producing safety masks for that market. And that to me will help this turn around. It's a small step. They do a lot of things. With 3M has a lot of different products and a lot of different pieces to their puzzle that help them be who they are. But them focusing right now on this virus, especially in Asian countries, I think is going to be helpful. It'll help bring ease to the stockholders. I myself am not stressing out at all about this. I feel that it's the perfect time to continue to buy. Yes, I did lower my industrial percentage a little bit. You saw that when you looked. But it's not because I'm panicking. I just want to get a little more into my financial and commercial currently. And then I'm going to go right back into bringing up my industrial. And it's already overinflated compared to the rest of my portfolio as it is. It's at 23%. I have it at 12. I really want to get it to around probably 15, 16%, but I just lowered it for the time being. But I'm going to bring it back to a 15, 16. But to me, that's the point of this video. Do not panic if you have 3M. I think it will turn around and pretty quickly. I don't mean next week or in 2 weeks. It may take a quarter, even a quarter and a half. But that's not the purpose of this investment. The investment isn't for me to sell off in 6 months or a year. The reason I'm doing this portfolio, and I've said it in almost every video, is it's dividend-based and dividend-based only. The value of the stock is great, but to me, when the value does decrease, it just allows me to purchase more of that stock for the future. And the only time I ever plan on selling any of my dividend stocks is if they cut the dividends. Now, if they cut the dividends, then I'll start to look into seeing why they were cut, and most likely, unless it's for a very good reason, that is when I will sell off my dividend stock. But till then, as the stock begins to lower, I'll just continue to buy more and more and increase the shares that I have into that stock and increase the dividend payout. Now, I'm excited in the next 2 or 3 weeks when I get my first dividend payout. It won't be very high. It will probably, if I had to guess, a few cents. But you have to start somewhere. You have to start, it has to begin somewhere and work its way up. And obviously, with the money I make, I'm just going to reinvest it in my portfolio. And this isn't a 1 or 2 or 5 or even 10-year portfolio that I'm looking for. This is something that I want to have grow until I retire. That is my plan. So by me investing $250 a month and a little bit more here or there, depending on what I can get from work, or I can save some money budgeting, or not going out to dinner, or just other means, selling some stuff I've got around the house so I'm no longer using it, then I'll invest that back into my portfolio. But until then, I'm going to slowly let this thing grow. And for anyone that thinks they don't have enough funds to start a portfolio like this, that's not true. Even if you're putting in $50 a month, yes, it's minimal, and your return is going to be very minimal. But as time goes on, that $50 will compound itself and slowly become larger and larger, because that $50 will pay off in the long run if you invest it now. So again, that's my advice. I'm no financial advisor, but thank you all for listening, and I look forward to talking to you guys in the future.